by their respective governments, and lately they've been investing billions of dollars of shares in U.S. financial institutions, the various hedge funds and private equity funds, even exchanges. What does this mean for national security in the U.S.? Joining us with more on this, Peter Thal-Larsen, who writes for the Financial Times, and with their respective views on this issue, Alan Tonelson is Research Fellow at the U.S. Business and Industry Council, Eli Lehrer is a Senior Fellow at the Competitive Enterprise Institute, and Herb Greenberg's helping me out on this as well. Peter, lately they've gone on this spending spree, these sovereign wealth funds, and they've gone after financial institutions. How much money are we talking about here?
Well, we're looking there was a report out yesterday from Morgan Stanley who have done the maths on all of this, and what they're saying is that there's $36 billion invested in financial institutions by these sovereign wealth funds since the beginning of last year, and $35 billion, about $26 billion of that since the beginning of this year. So they're really ramping up. I mean, that, you have to put that in context. That's about 1% of the $2.8 trillion that is actually sitting in the sovereign wealth funds at the moment.
Yeah, it doesn't mean a whole lot. Doesn't mean a whole lot to them, but it's still a lot of money. We show here who's buying what. You got Singapore Wealth Fund buying Standard Chartered, the United Arab Emirates buying into HSBC, China buying in both to Blackstone and Barclays, and the government of Qatar's sovereign wealth fund buying into the London Stock Exchange. Alan Tonelson, good idea, bad idea?
First of all, we need to understand that this term sovereign wealth fund is way too abstract to reveal what's really going on. These are government investment institutions. They are completely public sector institutions. And if the governments that were operating them had faith in free markets and were ready to let the chips fall where they may, they would leave the investing up to the private sector. Clearly, they're not financial actors alone. Clearly, they have longer-term strategic objectives, and U.S. policy has to keep that in mind. And in my view, it would be disastrous, not only for the American economy, but for the cause of free markets, to see these government-controlled institutions take a larger and larger role in the U.S. economy.
What do you think, Eli?
Markets?
Well, I actually agree with Alan on one important point, which is that under a free market, these funds would not exist. But my basic view, however, is that if other countries want to send their money into our economy, that is generally good for the U.S. economy. We shouldn't close ourselves off to any type of investment. It's bad for our economy. As it is, even if these countries do have nefarious strategic goals, which I don't think they do, since they are almost without exception
I'm glad you're
U.S.
confident
allies,
of that.
These funds are add to our economy. Why should we welcome any investment?
Herb?
Well, I think this is interesting because in the end we're debating what is a free market, and I just don't see how in the world you can keep any entity from investing in a public entity of this that's based in this country. The bigger issue here, and I don't know if any of the three panels have a feel for it, is, you know, in other countries there are immigration laws that actually affect how you can invest and where you can invest, and how does that fly in this country?
Alan, you and I have talked about this before. Is this a two-way street necessarily?
I think the two-way street issue is really pretty irrelevant, if only because there is no question that none of these countries would allow a U.S. government entity to invest in their financial system, their stock markets. This would be completely out of bounds. Again, we really need to draw the fundamental distinction between private investment, which should be as free as it possibly can, and government-controlled investment. And I have no idea how self-styled champions of the free market can think that it's good for the cause of free markets to see the role of government-controlled institutions get bigger and bigger and bigger.
Peter, is there any reason to believe that this is nothing more than a series of passive investments by these funds?
Well, I think they've gone to some lengths to make those investments passive. I mean, the Chinese, when they invested in Blackstone, accepted non-voting stock and with no board representation in an attempt to sort of make an effort to show that they were not wielding any influence. But I think there's also an interesting thing about this, which is that this is getting a lot of attention because suddenly this is focused on equities. But a lot of these funds have been invested in U.S. Treasuries. In fact, have been the main buyers of U.S. Treasuries for years and years. So I wonder whether you can really make that distinction between government bonds and equities.
Eli?
I agree that it's very difficult.